Good morning. Apparently it says I'm live. Can somebody confirm that for me here? I see some of the usual suspects there on Twitter. On Twitter, on YouTube, typing in. Good morning, Henry. Good morning. Okay, so I'm just going to pretend that I'm live and let's watch the CPI reaction. Okay, great, Henry. Thank you. Good morning. Okay, look at that. I guess the buyers of the 6090 calls might not have been so stupid, huh? Let's see. So initial pop is what? The volatility coming out, getting pulled out of the surface. Initial volatility adjustment, initial adjustment to the large positions, um, algos telling reacting to the numbers. So some market makers that specialize in zero DTE or more fast trading algo stuff are doing their stuff now. Others that have the whole inventory might not be rebalancing as much. 60/60, which we mentioned in the roadmap, is right here. That's kind of the first level we expect to go to. And 60/90, remember, I said it in my note last night, today. 60/90 is where customers are long calls. When I did my string, it left out the 6100, but we have long calls at 6100 and 60/90. Those are possible magnets, or if we don't get up there, and if we assume that those positions will stay till the end of the day, which we can't necessarily assume that now, then they become suppressant from above. Those deltas decay, and that's what happens. Now, give me 1 second here. Let's see what's going on. I gotta. Now, like I said in my note, today's a today's a snow day for me. When we were kids in school, we had snow days where no school. Today's a snow day for me. I'm not selling iron condors. Probably 90% sure. Of course, I might. What I want to do right now, to the extent that this is accurate, is this right? Okay, whatever. Um, I want to see what the deltas of these 60/90 calls are. 23 delta, they matter. It says 8,000 here. I think there's really 7,000, whatever it is. Doesn't really matter. Clearly, we got customer long here, customer long here, potential magnets. And we'll look at some other tools in a minute. 60/50, we had a void. So we can kind of move through that easily, and apparently we did. And then we had that same kind of cluster formation in the 20, 35, 40 area that we had um, yesterday, the last few days. That's there. 6,000 and lower is mostly sold options. So you got sold options, market maker positive gamma support here. You got more stuff here. You got more stuff here. So this is all sold stuff, supportive. If we should go down, which clearly looks like it ain't gonna happen, these would be, kind of where you would fly out somewhere in here. But as of right now, I don't know what the print was. I don't. If anybody has a print and they can put it in here, that would be cool. I don't know if there's anybody on Twitter. If there's anybody on Twitter, just type in there just so I know it's being broadcast on Twitter. It'd be nice to know, not that, anyone's obligated. Okay, now let's go to okay, so here's my daily plan. I put in pretty much every level. We got this whole cluster here, reaction level at 60.40. Yesterday's high, the week to date high was up here, the overnight high. So we had all this stuff clustering right below 60.50, and we're over it now. I gave 60.60 as the chop zone, and that's kind of where we're heading. And here's a 16. Here's I have a few things overlapping here. 60.75 is kind of like a flyish center of this. We have the weekly straddle high was up here, potential magnet to 60.90. So all this stuff up here at 6,100. Do we get there today? I don't know, but that's what's going on. Let's see. All right, now we're going to switch to options depth and see, and talk about what's going on. So this is market makers positions. So this is to the right, just think supportive, to the left, magnetic. And remember, to the right is mean reverting. So if we go down, we bounce. Let's use this one as a reference point. If we go up, we stall, and you kind of bounce between levels, But assuming there's not some big whatever, this ain't happening. I might even be tempted to sell some puts. I usually don't mess around on CPI day with a 10-year treasury, but this looks like a pretty safe. So so here was that cluster of positive gamma. So where we woulda, coulda, shoulda stalled, we were above it. We went right through it to that 60.60. Here's the stall factor with this kind of fly looking structure here with 70 as the magnet center customer long, with this stuff kind of stopping us up here and this stuff kind of supporting us down here. Do you guys see what I mean when I say a fly structure? Hey, Dan, glad you joined it. I'm going to put you on stage, and if you want to screen share, you can share your screen. If you want to comment, you can comment. I'm putting him on stage. So Dan is one of my trading buddies. He also does stuff with me on Mentor Q. He does all kinds of trading. He's real good with Z scores and volatility trades. He's got whatever his secret sauce is, and I'll be including some of that stuff as time goes on. More premium selling, not as babysitting intensive is what I do. So if there's people out there that kind of have to like work a day job, so to speak, and like longer DTEs with more mechanical, he's the man for that. Dan, you want to say anything or not? Either way.
Hi, Paul. Hope everyone is hearing me. Just came out of a meeting. Yeah, I do have a day job and other stuff in my life. So yeah, happy to be here. Happy to be able to join. Even briefly, I could never top the expertise Paul has as a godfather of SPX. I do some other kinds of trades. I do SPX trades too, and some other stuff. Most probably you've stumbled upon me in some other discords, and happy to add here. But I think from what I've heard from the last sentences, you covered a lot of stuff already for the day-to-day on the SPX, so very hard to comment on that. I will, whilst you talk, Paul, I will just revisit my own short plan for today. And yeah, and all the other stuff, if you're interested, we were gonna shoot in some info in the upcoming weeks about other kinds of trades you can do. Yeah, like all the Greek stuff and everything. So stay tuned, and I'm happy to be here. And yeah, we're gonna have a lot of fun, learn, and interact. And Paul, back to you on the stage. I'm gonna listen in, and if I find something in my daily plan from the price action now, I will come back and say something.
Great, thanks, Dan. Um, Dad's Dan, he's my buddy. He's real good at this stuff. Very mechanical, very methodical. Not typecast, but he is German. Just saying. Um, anyway, that said, I don't see any comments from X. Is anybody on X? It shows it's going to X, whatever. Anyway, so whoever's here, great. And so, uh, really, 6090 is the magnet, 6100 looks like we might get there. Then what happens? Do these people take it off? Do they? So that's going to be interesting watching what, what happens. Let me update all this stuff. Woulda, coulda, shoulda done it before, but I didn't, so too bad. So now we want to see what's going on above 6100. Let's look at 6130 arbitrarily. Let's look at 5945 just to see what's below the round number. This is just calls. We don't need to see that crap. Let's go 6. Let's go 5995 to 6130. Give it a wide. We want to see what's going on in the money. Not much here. 6050. Good morning. And let's see. Let's look at the puts. 6055. Okay, I like the put range that I have here. 0 DT. Okay. So let me update this. This might not have updated to today's values all the way. Yeah, and this has yesterday's values here. Here, 0 DTE. I don't need to see 5860 anymore. That's ancient history. I think I was looking at a wider time frame. Let's go 5940. I know this is very compelling viewing, watching me type things in the screen. Usually I charge extra for the privilege. Joke, folks. Let's not get our panties in a twist. Okay. So there's that big ass 6090 technical term, and that's the potential magnet and the potential stall. Now, again, like I said, do these people sell them? Do they hold them? Are they a hedge against some bigger position? This is a big trade somebody put in at the close yesterday. So more will be revealed on that one. And so how am I going to scalp this today? Well, people on the chat and the Substack and on Twitter, I might throw some comments in, whatever, and we'll see. But the levels I'm going to watch are the ones I talked about in my roadmap. I'm going to be watching the 6050 price void in here. Where is it? Where's 6050? Right here. 6050 is surprisingly void, this area. So here's your fade, bounce, whatever zones. The 6070 is kind of what is a magnet up, fall down, support from in here. So here's your big sloppy, choppy zone, 40 to 70. Stall up here, fighting against. So we have the positive stalling stuff here, fighting against these deltas here. So here's an interesting Greek dance. We'll see how that plays out. Now let's look at, let's take a quick look at charm. So here's your magnet here. the 60-90 potential. Here's your zones here, 60-50. Here's stuff down here. If I could get credit down there, I might take it. Now let's take a quick look at, let's look at charm, try to divine. So during the day, if we're below this, if we're in here, it's kind of suppressive, but charm is not a big factor at 10 o'clock. It's just not, other than bigger positions. Where charm starts to matter, 2:30, 3 o'clock, 1 o'clock, later in the day, the later in the day, the more it matters. And so, I mean, if we're trapped out here, but we're not going to be. So let me just kind of zoom in at the end of the day, and let's zoom into some ranges that might make sense. I might think of some, I don't mind taking cheapy flies. So let's just say right now we're up here somewhere, in this zone. So suppressive if below 50, 50, 40, not a lot. Above 60, 90. If those calls are in the money at the close, they zoom up to a 1 delta, and then we can go flying to the 6100. If those are in the money, then we go all the way up here. So I might look for a cheap fly centered down here. If this thing breaks, I might look for a cheap fly somewhere up in here. But these I'll do 10 wide. I might break the wings a little bit. I'm not going to spend more than 65 cents to a buck 10, just kind of depending. And I might leave them as a lot, or I might add stuff to them. I mean, clearly we're going up. Does anybody have the actual print numbers here? If they can put it in the comments. Like I said, I'm not a macro bro. I don't really know what the numbers mean. It doesn't. I don't really care what the numbers mean. I'll let the algos tell me what they mean. Thank you. Oh, 2.8 below expectations, right? It's back on the right. Odds of Fed cutting rates next week are down. Yeah, well, I knew that. I don't think anybody thought the Fed was going to cut rates next week. So that's that. And part of the narrative, I guess, that from what I've read, was that this is the first print that has, since Liberation Day, price increases and all that priced in. So all the macro bros can talk about, how much businesses raise prices ahead of that, and it looks like it didn't really matter. Looks like it didn't really matter. All right, now I'm just gonna mute mine for a minute. Let's just kind of look at the mental Q stuff. I had asked Fabio to give me some oil stuff. I never got it because mental Q has stuff on oil and on futures that really nobody else has. So that's kind of important or different. In a minute, I'll put, so 60-60 was stalling, right where we're supposed to, son of a gun. Hence the term roadmap. Hence the term roadmap. Um, so now we had the initial market maker hedging response, repricing the vol surface. And so now is where the real fun begins. And so we still have the same broad zones. Let's see what's going on with VIX. Teenager. Sub 16, 50, 17 was the big number. We had that crazy spike yesterday. in VIX. This time zone looks off. This looks like it's off by an hour. No, it's not. Okay. We had that, right. We had the spike in the morning at 11:30 at the Euro close, which I don't know what that was about other than some kind of algo, and that was the low of the day. Then we had this big spike yesterday. I thought it was at the auction. It wasn't, and that barely created any wiggles. I mean, it created a wiggle, but we were already stuck. SPX was stuck in that 20 to 35, 40 level that most of the battle was played out on yesterday with a few undercuts and overshoots. And that didn't really change the complexion all that much. But you can see it was just a quick spike. Now vol is coming a little back in. I mentioned in my note, let's look at the 9 day. Why the 9 day? Well, the VIX that's expiring this coming week, next Tuesday, Wednesday. Tuesday is the last day to trade it. Wednesday morning, VIX is the settlement. Is this volatility, not the VIX, because the volatility 30 days out. So it's what's priced in here that's going to be ruling the roost. And for a quick peek at that, I'm going to Gamma Edge, and I was chatting with the Gamma Edge founder, Paul Duncan. He's a buddy and a mentor. I would not be doing him a disservice if I didn't say he was a mentor. And when he comes on, we'll do a little banter. He said he'd be happy to come on. I think that'd be a treat. Okay, so, and they have a different way of displaying their data, whatever. He'll explain it. Um, so here right now, I just want to look at the upcoming VIX expiration, just kind of so we can think ahead here. So here's the OMG level for VIX. If VIX gets to 1920 up here, you see here's the call OI. We got 2000 at 20. 20 used to look 200. 20 used to look like a good idea. Now it's not. So whatever hedging was there for this is long gone. So what matters is right here. You see that 17. We have 191,000 puts. So if we're below it, suppressive, we stay below it. If we're above it, market makers have to start buying futures to trade it out. And you see, just look at the numbers. 191 and 184. So that's 16 to 16.5 to 17 is the battle zone, is one battle zone. Of course, then we have the round numbers here. No calls to speak of within range. We have 31,000 here at 18 versus 140,000 here. So these deltas get totally swamped out by these deltas. And here you have net delta. And you can just see the delta difference. This stuff just gets swamped. And so you can see. Trust your eyes. Your eyes are a good filter. That's one of his lines. We're stuck down here. Now, just for fun, thinking ahead, let's look at what's going on into July. So once this unclenches, once that unclenches, right, and we're left with this structure, what happens next? Well, we are no longer trapped by the 17, 18 area. Still got these puts here, but now they're further out in time, so there's less gamma, less hedging urgency. And we have this kind of battle zone at 20. That's the number that's mattered. COTMC, that's where the calls go in the money. As we approach it, things could get a little jumpy. The math says 19.86 is where it flips, and the math says 16.34 is where it flips the other way, and we're kind of in this transition zone. Expected move 6 points. So based on the math, we know we're not going down 6 points over here. Top, oh, here it is. Top 22, bottom 16.78. Oh, spot is here, bottom 11. We know we ain't going to 11. Of course, it's called dominated. VIX is always called dominated. And that's that. Any questions, comments? If not, I'm going to go, and I'll jump back here later at I don't know, maybe 10 o'clock, 10:30 to talk about trading. I'll be back on YouTube and on Twitter. I'm a ham. Let me just do something here. I'm just going to screen share this for a second while I get something. That's just the E-mini. That's just a very vanilla chart of the E-mini with some actually Mancini lines. Dan, who's floating around the background here, also does some Mancini level stuff. At least he maps them out. I'm not sure if I don't think he's scalping futures. He doesn't have time. He has a day job, actually a very good day job. Oh, there's Drew. Hey, Drew. What was I looking for? Oh, yeah, wait. I'm looking for the. So while we do that, and now, Dan, you want to jump on and say something and fill up some dead air time while I do this? If not, not. It's okay. I'm pretty good at walking and chewing gum, so I could do multiple things at once. What I want to get is some sign up links. Usually, market literate reminds me to do this stuff. There's Mentor Q sign up link. And of course, where's my Substack? Substack should be here somewhere. There's my Substack. Copy link. And if somehow or other you don't follow me on X, I think this is my X link. I have this saved somewhere. I think that's my X link. And there'll probably be more discount links as time goes on. What's this? Okay. And that's it. We're stuck right where we're supposed to be stuck. And oh, Michael, how you doing, brother? Good to see you. Michael, who is, I'll put him on the stage. He's probably not going to say anything. I'll just put him there so you can see his name. Michael is an old trading buddy of mine. I don't even remember when we met, 2016, 17, somewhere. I forgot where, maybe maybe Susie. He used to be a trading service that we were on together, I think, selling iron condors. Not selling, selling premium, like your standard 30 to 60 DTEs, selling puts or straddles, whatever. We've kind of developed a relationship over time. He's an iron condor guy, and he's got great timing. He's patient. He waits. He'll stalk his trade. He won't enter it. I tend to enter real early on the ICs. I'll get a few in within a couple seconds. Oh, that's great. I'm going to put that on the screen. Um, I'll get mine within the first few seconds, at least a few what I call my wish trades. And actually, I'm going to put on a wish trade just for fun. Probably not going to do it, but just to demonstrate how I might do it. And then I'll try to leg in. And I've seen Michael wait till 11 or even later, 10, 11, until we have a clean setup, and that's when he'll do it.
Oh, that's a good moment to maybe you to share basically the insights we had in our private chat. When is the best time to trade? And you had really nicely pushed that up. I think you also put that on Substack, but maybe you can just again for people who are patient, who maybe portfolio margin plays a role. Which is the best timing? I remember you say you showing this a couple of days back. We had talked about that a year ago, and yeah, Michael is super patient, super precise. I call him the man of steel. But he can fend for himself. But I will never forget. I think when he entered, I think a plane, and he had such a precise target. And after that, I don't know if he went up or down, but he was in profit for sure after he exited the plane. So you have to have a really good plan, and this is a good thing. Michael teaches us discipline every day with his trades. This is the thing you should have, and this is for me, for example, harder on the day trade stuff. On the other stuff, I'm really precise, and I can wait, and then I know time and volatility is working for me, so I can sleep well. And but Paul, back to you. I didn't want to interrupt the speaking flow you had, but I think there's something crucial because a lot of people they have problems not only finding the right strike but the right timing. And there's so much going on, so much noise. And not one doesn't trade in the zone, which is the essential of day trading.
And yeah, and I had a little graphic that I sent out somewhere, and I'll dig it up. I don't know if I can find it now, and screen share it. But we can actually do that one day during dead time or whatever, and talk about it. I don't know. Of course, Oh yeah, I think I know where it is. I think I sent it to my brother. I'll dig it up later. But while it was a cool graphic, the basic thing is 9 to 10, call it amateur hours, so to speak, even though it's really professional hour. That's where everything is going on. We don't really have a clear sense of the levels. Then after that, we go to like from 10 to 11:30 is sort of where the pros trade. 11:30, 12, we have the Euro Open. 12 to 2 or 11:30 to 2, I forgot the exact timing, is sort of the next dead zone in time, which was actually I like to trade during that time because yeah, that's where you can get some good scalping things in, or that's where I can put on a second set of iron condors. And then there's the end of the day power hour. Charm starts at 2:30, and then it really ramps up to the end of the day. And there's kind of different strategies or different ways to approach that. Now, Henry asked me what WTD means. I'm thinking That might have been, yes, that was a typo. I'm looking at my keyboard. The D is right next to the F. And so that probably was supposed to be WTF, which was kind of me being cute, like WTF happened. We're all the way up here. What happened to the Bears saying we're going down to the we're going down to the basement. So that's what that was. That was me being cute. It was a typo. And I use AI to write this as an edit and screen, and format it. I write it myself out of my brain, just the way you heard me talking about it here. That's the way I write it. ChatGPT doesn't make any decisions for me, but you would think that it would catch those typos, right? You would hope, but apparently not. Okay, so let's take a Tesla. We did a Tesla trade a couple days ago. I'm already out of it. I targeted. We were 295. I targeted over 300. 320 was the main convexity, and then 340 was the next level up. We're there already. Paper hands, and that's that. That's fine. Made $600-800. It's okay. I'm not looking back. 60-50. Okay, nice. Why do I say nice? This gives us a nice clean level to trade off of. What do I mean by that? Let's put the little roadmap on for a little clarity. We have this 60-50 void that we talked about, right? We have that 40, that that zone between whatever it was, 20, 20, where I had my beginning of the chop zone, that 20-40 zone, which kind of should be supportive or should tell us something. We have the over 50 magnet at 70 that we looked at before right in here. We have a 1 day max up there. And we have all the supportive stuff down here. And if this breaks, we have, more stuff down here. Just to remind everybody, including myself, here was the overnight low. Here's a week to date late range low. So if you do like price action TA or whatever you want to call it, or as my mentor, one of my TA mentors, I suppose I had two official TA mentors where I like studied it kind of intensively with individually. His TA would be broken down to one thing simple: look left. Look where the buyers and sellers showed up. That's Greg and Dan from Master Trader. They have a service, but they do something kind of way different. They started. Greg started trading in the 80s, whatever, 90s, and he does old school share sizing. Buy 1,000 shares, whatever it is, put a stop X number of points below, move your stop up, share size, depending on how much room you give. That's how much capital you want to have at risk. 1%, 2%, whatever it is, old school style. If that's what they do, I don't really do that anymore. And they also do options. Dan is more the options guy, and yeah. So, but that was a long-winded way of saying look left. And so look left, and you see where the levels are, and they're going to pretty much correspond. Okay, that's it. I'm going to get ready. Oh, look, I promise one more thing, just for fun, and let's pretend it's not. Oh, Vol Trader's here. Hold on. Hold on. Hold the phone, everybody.
I told you he will come. Yeah, he had a dead link all the time. Vol, are you
Okay.
here? Now it works, huh?
Okay, Vol Trader, introduce yourself. You want to say something?
I don't know if the mic works, but if it does,
We hear you well.
Yes, we hear you loud and clear. I'm going to mute myself so it doesn't bleed in.
Yeah.
oh, okay,
Oh,
yeah. So,
big legend.
I no, I would disagree on that. But hello,
No.
everyone. I'm a friend of Paul's and Dan's, and yeah, I learned a lot from Paul. So what's going on here?
So vol trader, as the name implies, looks at IV locally, fixed strike vol, and that kind of stuff a lot more closely than I do. I kind of intuitively factor it in, but he's got whatever his secret sauce is and stuff like that. He's mostly an NQ trader. He swings a big bat. Um, I'm not in his league. No, he NQ is a wild beast for me. You know that thing is a lot of points. I've done some NQ trades that he's outlined, based on where the vol surface is curved, funny, whatever with him, and I've made money. But that's kind of what he does. So I'm just bringing some of my trading buddies on here if they have any insights they want to share, or in the future if you want to screen share. I mean, basically, if you want to pull up a screen right now, I could get off it and do a screen and let you do a screen share. Or if not, in the future, I'm just kind of introducing the cast of characters, so to speak.
Yeah, we could, if you want, we could look at the dynamics that just happened the last hour following the CPI, and how how the market makers react to that from a quoting perspective.
You have a screen share you want to do, or just kind of, or should I put options depth up? What do you want? What do you want to use as a reference point?
Well, I can show what I use.
Okay, good. I'm going to take my crap off the screen and I'll let
Let
you
me
put
try
yours
and
on.
do something. So does it work? Do you see my screen?
Yep, there it is.
Okay. So regardless of this is the platform is something that I use I think for the last 20 years, maybe more than that. Um, these guys are Russian spin-off of TradeStation originally. They're called multi-charts. I like this platform because it's a very generic, very open C++ platform that you can basically connect anything to anything. So this screen, regardless of the names that you see in the background of the individual chart, this basically consolidates data from IB, different Excels that I run, TradeStation, and a lot of other stuff. What I try to do here is look at the reaction and the impulses that market makers do based on different types of market dynamics, right? So not to sound too fancy, if we look at the CPI that just came out, it was CPI, I guess. What you can see, and I'll try to focus things. So this chart, which is the most left one, I just enlarge
Let
it.
me interrupt for 1 second because I think it would be instructive if you can explain to them, as a former market maker yourself, how the vol surface gets repriced after the unknown comes out of the straddle once the announcement comes in, and how
Yeah.
that factors into the whole thing.
Okay, so probably you guys, depending on your platform, you're able to plot something that is called the skew, which is basically the local, let's take the 0 DT or the +1 DT. If you give a visual representation of every single vol per each strike, and you plot that, you get some type of surface which resembles a V shape or a smile, or something that resembles, I don't know, half moon or whatever you want to call it. Now, if you monitor that through the day, you can see that that thing moves, changes its shapes, and might tilt the risk reversal, meaning that you might see suddenly the call IV increasing during half an hour much more than the put IV on a delta 25. Different dynamics. They generally repeat themselves throughout the week. There's not a ton of dynamics that are need to be observed. But what is important to understand, and Paul just said that a long time ago, I was market making on Europe. It's basically the same concept. Obviously, these are European style options which do not convert into shares rather than your American type option that convert into shares. But other than that, pretty much the same dynamic. So if I'm a market maker and the CPI comes out and everybody's buying calls, right? So they're lifting my offers from the various calls on the various DTs. And what I do,
Can you
regardless of my
explain to the
position, yeah,
people what lifting your offer means? I know that's
okay, yeah,
standard market maker speak, but a lot of retail people don't know.
no problem. So if we go back, if we think of the option mosaic thing, that screen where you can build your strategy or buy a call and a put. So you have the various strikes, you have the bid ask for each put, each strike, so on, so forth. And if you add the column of the implied volatility, you can see per strike the implied volatility of the specific calls and puts. Now, the way it works is that most of the volume being done is against that spread, against those machines that continuously quote a bid and ask for each individual strike and option. And the machines, the owner of these machines are your classic market makers. They're not standing in a pit anymore and doing it manually, but rather they have these algos and machines which are co-located in the various exchanges, and they are 24/7, depending on the market, continuously giving a quote for the various strikes and indexes and stocks and FX, bonds, whatever you want. Now, the way they price the bid ask is through complex mathematics and quants that each of them employs, and they have some type of centralized risk quantitative thing which tries to guesstimate the best way to describe the future volatility. And once that is plugged into the quotation machines, so the IV is pretty much determined for any given second, and that can change every moment. But basically, that will determine the IV for each strike and for each DTE. And then they will place the bid and ask for each individual option with the IV already determined. So 90% of the pricing is already there. And then they might add different consideration depending on their inventory. So if he's truly loaded on a specific out the money call, he might play around with the bid ask in a way that he will be more attractive on the sell side of that option rather than on the buy side. The mid price, the theoretical price, will still be between the bid and ask, but the distance between the bid and ask to the theoretical price will not necessarily be symmetric. And that is the way they try to offset or balance out different inventories or areas within the skew for a specific DTE where they have a lot of exposure and they would like, from a market perspective, to just dwindle that down, right? So they will try to be more attractive on one side rather than on the other side. Now, what is important to understand is that any one of us can very simply, in a very simple way, extract the implied bid ask of the future for that market. So for example, if we're looking at the ES, I can tell you right now that for the ES at the 0 DTE complex, the bid ask spread, which is implied through the options, is almost 1 point. Now, the bid ask spread when you come and trade the future is a 1/4 point consistently, right? But if you pay the options when you come and just buy the bid ask on buy the ask of any single call or sell the put, whatever you do there, that spread is 1 point wide. So each time you just touch an option, the automatic machine converts that into a hedge in the futures, which will be on average a 0.75 profit, meaning 1 point is $5, is 1 point is $50. So every trade without commission consideration pockets the market maker something like $35, $40. So um, the way I look at the information is that I try to normalize everything to either futures or to some type of underline and continuously compare the option space to that underline. In this case, would be the ES option complex versus the ES future. And I would try and see if the implied future is trading above or below its fair value, if the spread is widening to, say, 2 points or shrinking to a quarter point. All those tiny information pieces explain different dynamics and what you might expect from the market. Like, for example, last month there was liquidity issues in the market due to the money market complex. I don't know if you guys follow that. That's a bit complex, but there was liquidity issues. So the implied bid ask of the future through the options was almost 1.5 points, 1.75, compared to where it is right now, which is between 1.25 point, between 1 and down to 3/4 of a point. So liquidity is much higher. This means that volatility will decrease, and we saw that process where volatility is decreasing the last month or so. And these can be easily predicted through following the things that I just explained. Now, back to the screen that you're seeing right now. So this shows the various at the money and tail IVs that are currently on the 0DT and on the +1 DT. I choose these randomly. It doesn't mean that the 0DT is more important than anything else. So what you're seeing at the top is the at the money IV on the 0DT, which is around 21. And you can see the big drop when the CPI came in, right?
So
Now,
no, that's a vol drop, not price drop.
yes, that's the at the money volatility, right? The continuous at the money 0DT volatility. So implied volatility, right? This derives from the option prices. Now you would say, well, sure, the CPI came out the way it came and the market reaction was to the upside, so you would expect IV to drop. Now that is not true. So in 0DT, it doesn't work like that at all. It can be totally, well, from a non-professional eye, it could be more random than what you would imagine. When you guys look at the VIX, which is basically, it samples the bid ask, the mid price of the bid ask over a lot of options and a lot of expirations, then you get a rather smooth dynamic and a negative correlation, meaning the price, the SPX goes up, the VIX goes down most of the time, right? When it doesn't, it gives you a hint, a small tell about some risk or some potential in the market that will be unfold the next day, but we can get into that another time. So back to this, we can see the at the money IV of the 0DT on the top. We can see the left tail, the 25 delta put on the second pane, right? And we can see the call side, the 25 delta call on the third pane. So, and then I can see the ratio between them, right? So I try to dissect the skew in a way that if the quoting machines are starting to sense something, let's say a big buyer of puts or a big buyer of calls, right? Or some institution calls into the market maker and says, hey, give me a quote on this, on that, and it's a big trade, they will immediately convert that information into the risk center, which will reprice the whole skew, and it will happen instantaneously. So while I would not know about this call, right? Somebody calls in and wants to buy 100,000 calls. I would not know about that call, but I would see suddenly a change which is significant enough to be observed, and I can see if if it's an increase in the IV in the calls, or if it's an increase in the IV in the puts while the market is not moving. So that is clearly information coming into the market, and that will move the market 1 point, 2 point, 3 points very soon, right? So I will be able to see that beforehand and try to capitalize on that by dissecting the skew.
Okay, so that was just a brief intro into what my buddy Vol Trader is looking at, and we, trade side by side a bit and chat. And so he'll be throwing in his insights. Part of what I'm trying to illustrate is it takes a village, it takes a community. I've got a lot of people that I know that do all kinds of different things, and together we try to figure out and make money. There's more than one way to skin a cat. He scalps and trades differently than I do, and some of you are iron condor people, some of you are option scalpers, some of you are future scalpers, whatever. And together we'll make money. And I'm going to have people come on. We're going to start. It's almost time for. It's almost showtime. So let me just. In terms of real showtime, as the market's going to open. Although I don't like to trade CPI day, I think below 5,900, I'm willing to sell, put in a few puts at the open and see what happens. We have some interesting stuff. Let me get screens real quickly. How do I do this? Let's see if I can get to where I'm trying to get real fast. Okay. I want to get here. Again, let's remember the shape of what's going on here. Think shape. And we're at what? We're right around here. We're right around here. So we have this void area here. We have this 60-40 area that's important. And so shape would put us, if this holds in the 60-50, we have a magnet up to here. We have this shape. Below here, this should be supportive. These market maker long, this should be supportive. We got this other little shape here. And then we have all the sold options here. So that's why I'm willing, even on a CPI day, to sell 59.95. I don't, if we look at where we popped from, I mean, just look, again, look at this price action. You don't have to be a genius. The overnight low was here. Now it's CPI day, so anything can happen. But I don't see us going, anywhere back down there. I'm willing to do a small auto. Like I said, I don't like selling options on CPI day. I might look at selling some crap for Friday. Could probably get pretty far out of the money. On the put side, the call side, I got to see what happens at that 60-90, 6,000 area if we get there, if there's even something to see there. We got these big long calls here. We got all these long calls here. Some of the 60-75 short put calls look like they closed out here, just the CPI, but that's really it. And so that's what's going on. 2 minutes to Wapner, so I'm gonna end the stream now. Thanks for attending, and I'll jump back later. I'll put it out on Twitter and on YouTube. I'm still not even sure how the notices go out on YouTube. I'll figure that out over the weekend, how to schedule things. Like I said before, I'm a 72-year-old man. I'm not a techie. This is a brave new world for me. And that's it. Trade safe, guys. Hope you had a great day. Thank you.